What's up, Sigma fam? This is Sigma here, and in this video I wanted to do a trade review for the last week of February and also look at the trading performance for the month of February, specifically for the London session. I'm also going to talk about how optimizing your trading days and your trading time and limiting the number of trades will significantly improve your profitability as a trader. I'll dive deeper into this subject on a later single video, but let's go further into it. This would be the last part of the Mastering the London series. Now, let's look at the month of February, okay, and look at the last week. So, I had this week, so 1, 2, 3, 4, 5, just 5 trades. Let's look at this trade. This trade happened on Friday, so what did I look for? Alright, if you look here, alright, price broke the last low before the high was taken. For me, this is the last low. So once it is formed, I look for a fair value gap or an imbalance between this breaker, so which happened here. So just above this, I set a limit order and I took this trade. Where is the proof of work? The proof of work that I have taken the trade and it was real is in the Discord channel called Intraday Setups. And if you search by net PNL, if you search by this term, you'll see that I update each time I take a trade. So this was on Friday, all right, and this is the proof of the trade. Yeah, all right, so just you know. So this is the first trade I taken in February. Now there's nothing much to talk about. It's just normal setup that I take. What do I look for? If you go to my previous video, I have talked about it, and if you go to my Discord of how I trade the London session, all you have to do is go to London session, and the written trading plan is here. All right, and how much do I risk on each trade is also right here. Now let's look at the second trade. The second trade happened on Wednesday. So what about Thursday? Why didn't I take the trade on Thursday? All right. So on Thursday, this is what happened. I'll just remove all this background. Yeah, price met all my setup criteria. Price took out the Japan low, price took out the pre-London low, price also took out the previous day low. That's amazing. Except for one thing, the last structure that was formed from here to here, as you can see, was pretty big. It's a 62-point move. Now, a breakup structure of this would create a 62-point move. It's a large risk for me to take a trade. Of course, many of you trade the inverse fair value gap, but I don't take any other trade in London session except for breakup structure. Now, how to trade the fair value gap trade? Now, I'll just give you a brief overview of how I would trade it. So what I look for is the first fair value gap, all right? That has to be broken. Once it has broken, what I wait for is the price to come back to the equilibrium point of the fair value gap, which should be this. Now, even if I wanted to take a trade, I wouldn't be able to because it happened in pre-New York session start, which I don't trade. It would be after the London opening. Another thing is, this trade wouldn't allow me to have the necessary risk criteria for the trade. Now, 28.50 is a big move because I trade only the mini Nasdaq. All right, I don't trade the micro. My total risk cannot be more than $500 a day. All right, so I will avoid this trade at all cost because it doesn't really meet my risk criteria. Now let's go to Wednesday. What happened on Wednesday? We had 2 trade setups. Okay, now before the London session, okay, I'll show you on the chart because I think there's a lesson to be learned on this day about trading intuition and trading experience as well, based on your observation on whether which trades to take or not. It's not always the system. There's some form of discretion as well, which can only be developed if you have been trading for a long time, the same time every day. Now what you have here before the London session started, price already took out the Japan low, which is here. The price hasn't taken out the pre-London low. Now, if you see on the first trade that has taken, in the last 30 minutes or 1 hour of pre-London, a breakup structure was formed. Here, the breakup structure is also formed. The difference between this day And the first trade that I showed you is that the fair value gap was untapped before the session even started. In this case, the fair value gap was tapped and price tried to break above. Now, if I see a scenario like this, I would only take the 25% trade if price, I can see I wouldn't set a limit yet. I would see price come down and try to hold this level, which in this case didn't because it swept it. And once the SWIP has formed on the pre-London, I am looking at, okay, I can take another trade, which happened here. Now this is a break of structure. Now price came above, so from high to the low. The first trade would be at the fair value gap. I set a limit here, all right? And the stop for this trade would be at the 25% level, which was here. And the stop for this and the second trade would be triggered at this point, which has also gotten stopped out at here. So in total, the losses of 15 points. But here's the thing: I didn't lose 15 points. My loss was 7.5 points because I risked only one contract per trade. Now, why is that? The reason is if the total points between this low and this high and this low is more than 12, which is in this case yes, my risk is one contract. If it's less than 12.5, all right, my risk is 2 contracts. And what would be my target? It's very simple: from this low to this high, all right, 1:2, which would be here. Well, in this case it didn't work out. It is what it is. Move on. Next trade. Tuesday. This was a good day as well, but I'll show you how I cut my losers. Why do I cut my losers so fast? If you take, let's say, 2 trades within the same zone, all right, one maybe at 50%, the other is at like 0.685%, okay. I see many people adding to losers. Get out of the loser first, then you can start another trade. That's what I do. That's what my system is. Now, before I begin this day, I will show you, before the pre-London even started, there is actually a break of structure. For me, this is a break of structure. But the problem with this break of structure is it happened during a low volatility region. Also, it didn't have any particular big cemented candle before it. Also, the fair value gap was tagged, so all this criteria was already met. So in order for my 25% trade to be taken, all right, I would look for price to come here, all right, and try to hold it, which in this case, it didn't. On this candle, it just swept, so I avoided this day. Now, you might say with the system, all right, if it's an automated system, it might actually take this trade. I follow a very mechanical way of trading, right? But there's also an element of discretion to understand the scenario of what's happening. Whether this pre-London would hold or there shouldn't be another sweep, it really depends on how close price is to the last point of liquidity. In this case, the last point of liquidity was this. For me, this is the Japan low. Okay, price took out the Japan low. As you know, like I trade large deviation. Is this considered a large deviation, first off, from Japan? Not really. It's not that large compared to how big the whole Japan session was. It's a small deviation. Also, from this liquidity, this is also a small deviation. Taking that into consideration, when you have corresponding liquidity levels like this, price tends to usually not hold the break of structure that's formed in the pre-London session. But in the London session, what it did, it took out the liquidity, and now I will be looking for my trade, which happened right here. It's a break of structure. First trigger was right here, which got immediately stopped out at my 0.685 level, or I call it 25% level. It's not, I know it doesn't make sense, it's just, it's the upper spectrum, upper quant of this high to the low. All right, so that's why I call it 25%. So this might be in the 50% region, this might be in the 75% region. Okay, anyway, so you have it here. So price triggered, I got stopped out, that's great. And now I have another trade taken right here, which tagged in and didn't stop me out, and it went all the way to my target, which was 25 points, I guess. Now, how do I set the target? Very simple: high to the low, 1:2, based on the experiment. it often plays out. If, okay, how would I manage my break-even trade? What I do, once the price has come to 0.15, I move 1 point. If it's 2 contract, 1 contract stop would be at break-even, the other contract would be at here. And then let it ride, or come back to my stop if it wants to. But in this case, it made the target. Now Monday I don't trade. Why don't I trade Monday? This is where I would talk about how to minimize the number of trades. Look, if you journal your trade every day, you would get data. You put down the time that you traded, you put down the days that you traded, and you'll get a certain data. And based on the data, what January, December, and November had told me, that Monday usually is not a profitable profitable day. Yeah, I don't want to be on a day where usually it's not profitable. It doesn't make sense to me. Why would I show up if I know no customers is going to show up in my doorstep? It's a business, all right? I wouldn't trade a bad business day, right? Why would I open a shop where I know there's like a protest going on just in front of my shop, and it might just allow people to loot my shop? I wouldn't, right? That's the thing. Now, also, it has to do with the algorithms or whatever runs the market, I guess, that Monday usually is after the trading weekend, right? So during this time, the US algorithms hasn't really woken up. They would wake up at New York session, and they would be kept open for the remainder of the week. That's what my theory is. I may not be right, but that's how I think it works. That's how Monday doesn't really work for my trading strategy, I guess, because the reversal, there isn't enough liquidity to create a reversal structure during the London session, or enough money. So if you have the algorithms of US, London, and Asia all running during the London session, let's say, in order to create a reversal, not a reversal, or to buy at an at a, what do you call it, at a fair value point for the hedge funds and the investors, they would you need enough algorithms in the market, all right, which doesn't really happen during Monday on a low liquidity day. Maybe that's why it doesn't work. All right, that's about it. Also, let's talk about consistency. You know, let's say we have 2 spectrum here. One is the number of trades, T, and number of days. Yeah. Now, if you show up at the same time, T is, let's say, the time, all right, and D is the number of the days that you show up, and plot the time and the trades, all right, just happening, okay, you'll find a consistent pattern. And if you trade the same setup within this session, you'll find a pattern to be more consistent, all right? It's not like it's not outliers. But if you trade different setups, let's say one day you're trading reversal, the other is a continuation, any setup that you see that might be profitable, all right, you just keep taking it with the same account. What will happen is that it will randomize your data a lot. All right, you'll still be profitable, but the P&L swings would be much greater in there because there is too much noise. Now, another thing is that when you have something like this, let's say if you have another strategy that's a working strategy, then it is profitable, right? You can trade it, but have a separate account for it, okay? Because again, consistency and the pattern formation, you will see a lot of pattern formation. Because the way I found that Monday is not a profitable day for me is because being consistent, being there all the time, all right, when the market is there, all right, I show up and I see what's happening, and I collect the data, and basically I'm a data analyst here. And all right, I believe in my data so much, that's how I am creating my prediction for future trades. Hopefully you understand this concept of why it's important to minimize not minimize, is to be consistent in everything that you do in trading, whether it's taking the same setup, having the same target, all right? Because in discretion, a lot of things can play out with emotions. It's a much more difficult endeavor if you're just a completely discretionary trader. It might work for some, but it's not for everyone, especially it's not for me. So that's about it, guys. Hopefully you enjoyed the video, and if you do wanna support this channel, join the Discord, like the video, and subscribe to the channel. I'll see you next time with another video that you might like. And if you have any requests of what sort of videos you want, just put that on the comment. I'll try to make it. Thank you.